Imagine being able to access hundreds of thousands of dollars completely tax-free, while the IRS can't do a thing about it. No loopholes to close, no hidden trick. Just a financial tool sitting in plain sight, one that the richest Americans have quietly used for decades. And here's the crazy part. Most people who hear about it for the first time don't believe it's real. But it is. And today, you're going to understand exactly how the rich use life insurance to pay almost zero taxes. Legally. Before we get into the mechanics, let me ask you something simple. When you hear life insurance, what comes to mind? Probably expense, boring paperwork, something you buy when you're old. But to wealthy Americans, life insurance is something completely different. It's a tax shelter, a private bank, a retirement income machine. It's one of the few places where your money can grow almost invisible to the IRS. And the IRS knows it, but they can't stop it, because the rules legally protect it. So how did this happen? Why does this one financial product get special treatment? And why have rich families, CEOs, politicians, athletes, and even major banks been quietly storing money inside life insurance instead of keeping it in savings accounts or investments? The answer is going to shock you, because it's not by accident. It's by design. Here's the first thing the rich love about life insurance. The cash value grows tax-deferred. That means it compounds every year without being taxed annually like a normal investment. Imagine earning interest that stacks on top of interest without the IRS taking a cut each year. Most people don't think about this, but when you eliminate taxes, the growth of your money becomes explosive. It's the same reason a Roth IRA is powerful, except life insurance doesn't have income limits, contribution caps, or early withdrawal penalties. It's basically the rich person's version of a supercharged Roth. But here comes the part that really blows people's minds. The wealthy don't actually withdraw money from their life insurance. No, they borrow against it. And that changes everything, because loans are not taxable. When the rich want money, they call their insurance company, take out a policy loan, and the IRS sees it as debt not income. That means they can access huge amounts of cash completely tax-free. And the best part? Their cash value keeps growing, even when they borrow from it, because the money remains inside the policy compounding uninterrupted. It's like borrowing from a bank, except you are the bank. Now, you might be wondering what happens to the loan. Doesn't it need to be paid back? Actually, the death benefit, the tax-free payout that goes to your family, automatically clears the loan when you die, so the cycle is complete. You grow wealth tax-deferred, you access it tax-free, and your heirs receive money tax-free. That's why wealthy families have used this for generations. They're not buying life insurance to protect their family. They're using it to protect their money from taxes. But here's where this gets even more interesting. Many Americans think this is something shady or hidden. It's not. In fact, the biggest buyers of life insurance in the US are not families. They're banks? Yes, banks. The same institutions that tell you to keep your money in savings accounts are quietly putting billions of dollars into cash value life insurance. It's so common that it has a name, Boley Bank-owned life insurance. Why do they do it? Because it's safe, grows tax-free, and gives them guaranteed profit. So if you've ever wondered why the rich trust life insurance, it's because the most powerful financial institutions in the country do the same thing. And here's the strangest part. The middle class almost never learns about this. Why? Because life insurance agents usually sell small policies for income protection, but high net worth individuals, they buy specially designed policies built for maximum cash growth, not maximum commissions. These aren't normal policies. They're engineered, customized, structured for wealth, sometimes even called rich people Roth IRAs. And unless you were in the financial world, you'd never hear about them. Now let me explain the part of the strategy that most people don't realize. This isn't just about avoiding taxes today. It's about avoiding taxes for your children, your grandchildren, and your entire bloodline. The death benefit bypasses probate and taxes. It transfers outside of the estate when set up properly. And that means generational wealth can grow untouched for decades. Think about it. Every time the money passes to the next generation, they can start the same cycle again. Cash value grows tax-deferred, they borrow tax-free, and the death benefit resets everything tax-free. It's like a financial shortcut that builds wealth faster than almost anything else available to the public. Of course, here's the catch. This strategy only works if you structure the policy correctly. If it's done badly, you'll lose money. If it's overloaded or not designed properly, it becomes taxable. If you choose the wrong type term, cheap whole life, or policies with huge commissions, you'll never see any of the benefits the wealthy use. That's why rich people don't buy the same policies the average person does. They use high cash value designs, policy overfunding, PA'd-up additions, and properly structured loans. There's a world of difference between regular life insurance and wealth-building life insurance. But here's the big twist. Most wealthy Americans didn't invent this strategy. Life insurance has been tax-advantaged for over a century. The government created the rules, and the wealthy simply took advantage of them. And unless the law changes, and it hasn't for decades, this strategy continues to work exactly as designed. So now you know. While most Americans keep money in taxable bank accounts, the rich keep money in tax-protected insurance contracts. While most people use life insurance only for death protection, the wealthy use it for life. And while the average person pays taxes every single year, the rich find legal ways to reduce, minimize, or eliminate them. Understanding this strategy doesn't mean you need to become a millionaire. It simply means you're beginning to understand how money actually moves in the real world. The financial system isn't designed to be fair, it's designed to be understood. And those who understand it win.